Hash rate is the raw energy that's securing Bitcoin. When a country's mining, it's not just earning Bitcoin, it's buying influence over network security. So if countries are holding Bitcoin as a reserve asset, that then gives them an incentive to secure the chain. And so you can see this flywheel where countries start mining, and that gives them hash rate, which gives them security power. So to put it simply, owning Bitcoin without hash rate is like holding gold, but letting somebody else guard the vault.
I'm your host, Mags, and you're listening to Magsplaining, where I bring on interesting guests to talk about tech, money, and power shifts. Welcome, Matt, to Magsplaining.
Great to be here.
I'm excited because I feel like you've just started your podcast circuit journey. So I get to be one of the lucky few that gets to learn about what is American Bitcoin mining. Is it a treasury company? Is it accumulator? And what does that even mean?
Yeah, excellent question. So what I would say about American Bitcoin is that American Bitcoin is an accumulator. An accumulator is a business that takes the best parts of mining and the best parts of a treasury business and combines them. So on the mining side, the goal is maximal exahash, minimal cost of power, right? So it's operational discipline. It's about steel on the ground and Bitcoin coming out. But you need to be very, very thoughtful about your costs, low SG&A, et cetera. That's this half of the Venn diagram. The other circle that you see is the treasury side. So treasury business, very similarly, you want operational discipline, low SG&A, but your focus there is the capital markets. It's about finding ways to monetize the volatility of your share price. So typically volatility can make people nervous. In Bitcoin, volatility is a big part of the engine. And so for us, we're able to harness that volatility through different market offerings in a way that allows us to accumulate more and more Bitcoin and ultimately grow Bitcoin per share, which is our true goal.
You say harness volatility. Can you
Yeah.
dive a little bit more into that?
Yeah. So harnessing volatility. So three layers to our business. Layer one is mining. Layer two is the treasury, which is what you're discussing. And then layer three is the ecosystem. So let's double click a bit on layer two. So when I say volatility, I mean that in many ways, American Bitcoin rides the volatility the way that traders might, but at a corporate scale through things like an ATM raise, convertibles. We don't have one right now. Balance sheet moves. This is a form of asymmetric accumulation. So finding ways to use our shares to grow our Bitcoin stack. So we grow via mining. That's a way to accumulate Bitcoin at a structural discount, maybe a 50% discount through disciplined energy usage. But on the capital market side, the question becomes, when do we issue shares? And that we believe is value accretive, right? You put shares out in the market, and that is giving you what's called Bitcoin yield, because you're turning around and you're taking that capital from the share sale and you're using it to buy more Bitcoin and grow your stack. And so for us, building that fortress balance sheet is the North Star. And so when we talk about our business, you've got the treasury side and you've got the mining side, but at the end of the day, it's about accumulation and Bitcoin per share.
Awesome. Thanks for clarifying that. So, okay, you framed ABTC as an accumulator, but how's that going to work in practice? For example, what is your KPI? Is it Bitcoin per share? Is it fleet efficiency?
Yeah. So I mean, all the above, right? So I think for us, let's talk about each layer and what success looks like. So the macro KPI is very simple: per share, hash rate efficiency, treasury growth. Everything rolls up into those three. That's the core of our business. So to break it down a bit, Bitcoin per share is the core metric. How much Bitcoin sits behind every share of ABTC? This to me ties directly to investor value in our accumulation first strategy. It's a very easy North Star. Second, if you go to the mining side of the business, you've got a few key levers there. You've got exahash online. This is a classic mining metric, right? What's your operational horsepower? You've got joules per terahash. That's our efficiency of our fleet. So it's not just the exahash themselves, it's the quality of that exahash, which you see in the joules. So we're running a liquid cooled fleet, largely liquid cooled, brand new machines that are really putting us best in class. And in mining, it's all about being the lowest cost operator. So for us to have this fleet, we're trying to future proof our business to the best of our ability when it comes to mining. And our target there is to grow. We're at about 25 exahash today. This puts us in sort of the upper echelon of miners, but we would grow that even higher so long as we're doing so in a way that is going to accumulate Bitcoin. We would never want to spend money on machines that are not going to make back more Bitcoin than they cost. So we're very thoughtful about our expansion, both in terms of mining purchases, in terms of where we're going to go for energy. It really has to make sense to maximize the amount of Bitcoin we're getting per dollar. And then finally, there's treasury accumulation. So this is the total Bitcoin held on the balance sheet. Is a ratio here of mined Bitcoin versus bought Bitcoin at spot. But the overall theme is a HODL discipline, growing that stack. And that's something we're doing no matter what side of the business you're on.
Yeah. So what's your treasury playbook then? Like, will you ever sell versus hodl?
No. So we've actually never sold a single Bitcoin since we started the company. So we launched this company April 1st. And the day that we launched, we carved out of Hut 8. So you're probably familiar with Hut 8. They were a large miner. They're now concentrating more on being an energy infrastructure developer. So they run our Bitcoin facilities. They're very good at the mining operations. But Hut 8 is also running all sorts of interesting stuff for AI and high performance compute, or HPC, where we're focused solely on the exahash. So as we think about that, growing that HODL and what that looks like in that Treasury playbook, it immediately started with routing that horsepower, that exahash, towards our Treasury and our accumulation. So the playbook goes a few ways. Step one is mine below cost. That's layer one. Target that very low all-in cost. Every coin that we mine is instantly accretive compared to buying on the market. So if you look at other cryptocurrencies, Solana, Ethereum, etc., they typically have some sort of native yield, validators, etc. There are ways you can stake it. Bitcoin today does not really have that. If you want to have Bitcoin for less than spot, you have to mine it. And you have to mine it well. You can't just go out and mine it. You need to find low-cost energy and run machines effectively to accumulate that Bitcoin. So for us, mining below market is a great way to accumulate Bitcoin below spot. Second, the Treasury playbook of you HODL. You don't sell. Avoid forced liquidations. We're not looking to liquidate. We're not looking to pivot. Bitcoin is our focus. Bitcoin is our North Star. And so for us, the Bitcoin buy strategy is there, but there's no sell strategy. We're not interested in that. We're solely interested in accumulation.
Yeah. Awesome. So you talk about Hut 8, and can you describe a little bit more detail, sort of what the relationship is? How are the companies structured? How do the firewalls work?
Yes, yes. So right now, Hut 8 is a majority owner of American Bitcoin. So when the company was started earlier this year, it was a joint activity between Hut 8 and Eric Trump as a co-founder and our chief strategy officer, Don Jr., et cetera, were also involved. And so it was initially sort of a two-party agreement, effectively, largely speaking. And so that over time, now that we're in the public markets, we're able to share the story with the wider investor community. And so the Hut 8 share is still a majority, but rather than being 80%, it's more like 63, 64%. And over time, that stake will probably shrink as more and more investors are participating above and beyond Hut 8. You can think of Hut 8 as our exclusive infrastructure and operations partner. We are asset light at American Bitcoin. They're asset heavy. It's a perfect division of labor. You've got on one hand us focused on exahash, on controlling the Satoshis, etc. They're really focused on how do you manage the energy, what are the operational needs of that fleet. It's a good relationship. So they own and operate the sites, they procure power, they build facilities, and they run the day-to-day. They're doing a lot of the back office work, which allows us to run an asset light model at American Bitcoin. We don't need that many employees to run our business because we're able to outsource so much of our sort of day-to-day tasks. And that allows us to put more and more of our capital into the two things that matter to us, which are Bitcoin and exahash.
Yeah. So I think there's a lot of public attention because of both Eric and Don Jr.'s involvement. What are some of the myths versus the realities about their roles day to day in decision making?
Yeah, so it's been great to have them on the team. There's a few angles to that. Obviously, there's a lot of noise because of the Trump name. The reality of this is very simple. This is a Bitcoin first company with an American mission. And having some of the great communicators that we have in Eric Trump and in Donald Trump Jr. helping articulate that America first approach to Bitcoin has been awesome. So there's a myth that this is a Trump family company. No, this is a collaborative effort. We're a minor business. We're a treasury company. We have some of the best horsepower and strategy that you can get from having them on our team. But we are an operating business. I think their brand power, it brings attention, but the business for us remains Bitcoin per share, right? We're going to be judged on our reserves, not our pep rallies. And it's been great to have them and have them be a part of our mission and get folks as excited about Bitcoin as we are. But again, it's a collaborative effort.
I want to talk a little bit more bigger pictures like national security and geopolitics. What are the strategic reasons for nation states to engage in Bitcoin mining or to encourage hash rate migration domestically?
Yeah, this is the future of Bitcoin. So Bitcoin has evolved. A decade ago, it was literally underground. It was guys in basements, right? Over time, though, Bitcoin has now achieved a form of institutional adoption, especially on the mining side, where we're at industrial scale. That is sort of a new era for the industry. So there's some strategic reasons for nations to mine Bitcoin. One reason that nations would want to mine Bitcoin is monetary sovereignty. As more and more of the world gets a bit jaded with fiat currency and is looking for an alternative, mining Bitcoin is a means of controlling your monetary destiny. Miners are controlling the share of the network's issuance rather than relying on foreign held reserves. So if you're a country, it's a hedge. It's a hedge against weaponization of fiat currency. It's a hedge against any sort of geopolitical tension. It's a way to turn energy, which a lot of countries have ample supply of, into currency, into the hardest currency out there. So it's a pretty compelling currency argument. The other reason that countries may be interested in the mining side is the energy strategy. So whether it's stranded or excess energy, it's turning that into a strategic exportable digital reserve, and it's monetizing the domestic grid of these countries the way that oil states have historically monetized oil wells. So it's a sort of cyber physical resilience to have mining in your country or accumulation. Even if you're not mining, having a Bitcoin treasury component to a country's financial strategy can be quite astute. You've seen that now. El Salvador was very early pioneering this. Obviously, President Trump signed the executive order about having a stockpile here in the United States. I'm very interested to see where the policymakers choose to take that over the coming quarters and years. And this for us is a very potent financial hedge. And so at the institutional level, that's very exciting. And we finally evolved as an industry to the point where it's going to be very compelling at the nation state level.
So it sounds like you think that hash rate should be treated as strategic infrastructure, for example, like cyber in a country and energy grids.
Yeah, put simply, hash rate is the new oil barrel, where if you don't control it, somebody else does.
Love it. So, what policy changes do you think would most impact American hash rate competitiveness to bring hash rate domestically?
When I think about policy, I'm a big believer that clarity is kindness. And so when policymakers get together and provide very clear rules and guidelines, it's better for everybody. So for years, miners or crypto in general had a touch and go relationship with presidential administrations, with financial regulators. We actually have kind of put our hands up and said, hey, regulate us, give us clarity, give us that strategic foundation that we need to grow our businesses here in the United States. And you've actually seen that in spades with the new administration. President Trump and his team have thought very hard about digital assets, what that means to the strategic advantage of the United States, and how to create those jobs here. And American Bitcoin is a part of that story. If you think back 2, 3 years ago, Operation Choke Point was really killing our industry in the United States, which was driving a lot of the opportunity overseas. And the US was at a risk of ceding its geopolitical edge in digital assets to other countries. Under the new administration, a lot of that energy has been brought back to the United States, and you're really seeing a pickup here that I think will continue the US's edge in the industry.
Can you discuss the connection between nation states holding Bitcoin in strategic reserves and also Blockspace? What role does Blockspace play in this game theory between nation states? How could it be used as a tool for either economic or political leverage?
Okay, so I'm going to split that into three lenses. First is hash rate, second block space, and third reserves. If you think about hash rate, that is equivalent to security power. So hash rate is the raw energy that's securing Bitcoin. When a country is mining, it's not just earning Bitcoin, it's buying influence over network security. So there's a security argument to hash rate. Block space is equivalent to the monetary rail. So every block on the Bitcoin blockchain is a scarce digital real estate asset. So nations holding Bitcoin also care about block space because it's how value will move across borders without clearance by SWIFT or Fedwire. It is the monetary rails. And you've seen this a bit with stablecoins. So Bitcoin and stablecoins, people always ask what the relationship is between the two of them. I'm bullish on folks getting onto a blockchain at all. And so for me, the more people are exposed to the blockchain rails, the more likely Bitcoin is able to kind of permeate the ecosystem. So block space to me is very important. You could think of block space as the monetary rails for the financial future of the world. And then third are the reserves. So if countries are holding Bitcoin as a reserve asset, that then gives them an incentive to secure the chain. And so back to mining, mining aligns their energy policy with the balance sheet. They're defending the value of the reserves that they're also creating. So you can see this flywheel where countries start mining, and that gives them hash rate, which gives them security power. The asset that they're mining, Bitcoin, has block space. Block space is that monetary rail for value to move across borders. And that in turn solidifies Bitcoin as a reserve asset. And now we're back to mining again. So you can see how this is going to grow as sort of a geopolitical flywheel over the coming years.
I think you can't have one without the other. You need access to block space because that is how the transactions of either you as a government or your citizens get included into the network, right? So I think it's
Yes.
important. Everyone focuses on hash rate, but you have to focus on both, I think.
So to put it simply, owning Bitcoin without hash rate is like holding gold, but letting somebody else guard the vault.
For nation states that are interested in mining Bitcoin, do you think there's certain hash rate percentages or other milestones that they should be aspiring to? For example, should they be looking for sovereign pools or agreements or alliances? Like think of world trade agreements.
Sure. So, without giving a blueprint for state capture here, obviously, you have to be careful, right? If we're gonna play games at the state level, you want to be very thoughtful about what strategic advice you're giving maybe a competitor nation, right? Not Bitcoin is worldwide. I mean, I don't know how many languages your podcast is translated into, but I think we should be thoughtful. But as a benchmark, my framing here would be that no one country should dominate Bitcoin's hash rate, and that's the beauty of it. But if you're a sovereign holding Bitcoin, it is rational to secure a meaningful slice of the network. So if you have a portion of the global Bitcoin supply in your reserves, it's an appropriate benchmark to have at least 1 or 2% of global hash rate within your borders. That is enough to guarantee participation and some network intelligence to what's going on. And it's a symbolic stake that shows skin in the game. If you were to bump up a level and you were to have 5+% of global hash rate in a country, you're now at this level of strategic influence because you're a major validator of blocks. And this is also going to give you a voice in that energy meets security conversation. It's equivalent to being something like a top 5 energy exporter if you were to put this in oil terms. Now, if you go to the next level, so 10% plus of global hash rate, that is some serious capex to get there. It's akin to being an oil superpower, right? This
Yeah.
starts to give countries very serious defensive capabilities because you're able to then really play into the block space, as you said, play into the pools. And that would ensure that the transactions of the reserves are very unlikely to be censored by their adversaries.
Yeah, Bob Burnett, has an interesting perspective on this, where he says that every country should aspire to have, and not just necessarily at a nation state level mining, but domestic miners should aspire to have at least the percentage of GDP that they contribute to. And
Yeah.
I think that's actually a really good aspirational target for every country. I actually foresee in the future where nation states that are mining having some sort of alliances between each other, like world trade agreements, because it preserves their access to block space. So if you're smaller size, but you have an agreement, you can ensure that your transactions are being included. I think that that's the world we're headed to, maybe 20, 30 years.
It is going to be very exciting to see how things evolve. We're at the very early days of whatever the thing that comes after the Bretton Woods system is, but it'll come soon enough.
So we talked a bit about energy in the context of Trump's administrative push to unleash American energy through executive orders. Do you think that miners are starting to take advantage of that, or do you think other additional policy choices are needed?
So I believe miners will make the U.S. energy advantage count. So under a Trump administration, the lever is very clear. You turn domestic power or energy into a national Bitcoin reserve. Now, the way we're doing it is through private industry, right? These are private miners. But there's a playbook here for U.S. leverage that will harness a lot of these policies from the Trump administration. So U.S. miners converting straight natural gas or renewables or nuclear into hash rate is one way. And then the other, so let's actually focus on that. So energy to hash rate. U.S. miners convert the electron, whether it's from nat gas, whether it's renewables, which are intermittent, but can be a great source of cheap energy, or nuclear, which is up and coming, into hash rate. This, in turn, going back to our conversation around nation states, would turn America into the world's anchor for Bitcoin security, kind of the digital OPEC of one. And then at the next level, you've got this hash rate to reserves, where so many of these companies, back to our sort of treasury roots, have this ethos of don't sell coins. What that does is that builds a US based reserve of mined Bitcoin. It's a bit like the Strategic Petroleum Reserve, but digital and privately held. But as we think about Bitcoin more broadly, even if we were to mine in other jurisdictions, if those coins are coming back to the United States for custody, to me, that's a win for the United States.
Speaking of sort of national security concerns and energy dependencies, we've got and we've got AI races and digital asset races to acquire reserves. What are your thoughts around reducing US reliance on either foreign energy or foreign tech for Bitcoin infrastructure?
So let's divide. What are my thoughts around reducing U.S. reliance on foreign energy? So the United States is actually a net exporter of energy. So we're now increasingly in a country thanks to fracking in the Permian Basin, among other places, thanks to a large adoption of renewables, again coupled with thermal baseload, which we cannot ignore, and then now maybe a nuclear renaissance going on. America is really becoming an energy powerhouse globally.
Yeah.
Always had the potential, but we've really seen the fracking revolution really galvanize American energy above and beyond what you might have expected 15, 20 years ago. On the technology side, There is absolutely interest by the American tech community more broadly, not just Bitcoin and Bitcoin miners, in having domestic supply chains. That's something that we all aspire to. It takes time, but everyone is on board with the idea of, even if it's international companies, having manufacturing in the United States, having that innovation here in the United States, and ultimately having that innovation turn into hash rate here in the United States. So the domestic infrastructure narrative in reindustrialization of the United States is really happening more broadly. It's somewhat of a metagame, and mining is absolutely going to be a part of that.
Yeah. Let's go back to the strategic Bitcoin reserve. President Trump's executive order established the reserve, aiming to acquire up to 1 million Bitcoin. What do you think is the base case for having a national strategic reserve?
So the idea of having it at the federal level is interesting. So Texas is also looking at it. A few other states, there's been some interesting movement in Arizona, among others. In many ways, the strategic Bitcoin reserve is a natural extension of what miners in the United States are already doing, which is turning U.S. industrial power into the hardest asset and then holding it. It is an interesting hedge for a federal government to do. It gives the U.S. a parallel store of value that's not really tied to foreign creditors or FX flows. It's a little bit analogous to us having the gold that we have in Fort Knox, et cetera, right? And so if I think about this, taking the mining out of it and really just focusing on fiat versus Bitcoin, this is a pretty good hedge against currency being weaponized, not even just by the United States. If other countries start playing games with U.S. treasuries, obviously we are an exporter of treasuries all over the world. There are variables beyond just the domestic market. And so having some Bitcoin is a means of really starting to make sure the United States is positioned for whatever revolutions happen in the digital world, as well as whatever games other countries want to play with fiat currency.
Yeah. The recent Bitcoin Act proposed a federal Bitcoin purchase program. What role do you think that domestic miners should play with respect to the SBR?
Miners are predominantly focused on new coins. So every day, new coins are produced globally. We get our share pro rata. To really fill a strategic reserve, it's going to take more than that 450 coins per day that are produced worldwide. So miners are going to play their part in securing that reserve, tying back to the idea that hash rate is security power. The government may buy via spot. It may convert other assets it has. There are a few levers that I know folks in DC are considering as to how they'd want to accumulate Bitcoin on the federal balance sheet. As a miner, it's really our responsibility to safeguard that value. This, again, comes back to the hash rate argument. If you think about it, we could have a phenomenal Bitcoin reserve here in the United States, but if all the mining activity has been pushed overseas, like I said before, it would mean that someone else is guarding our vault. So my vision would really be that miners take on the responsibility of being the guardians of this asset class, and the federal government chooses to accumulate as much or as little as it sees fit.
Is American Bitcoin only focused on mining within the US, or would you contemplating expanding your mining to other places, maybe to diversify energy or diversify from a geopolitical perspective?
We have assets across North America. The United States is plenty large enough at this point for us to really focus our efforts here. We would certainly be opening to working with strategic partners around the world if it makes sense from an operational standpoint. What I mean by this is that the US is a great jurisdiction. We've got tons of energy. We've got rule of law. We've got a pro crypto administration. It would take a lot for us to want to leave, and we'd never leave fully. But even for us to expand a little bit overseas with the right partner, I'm sure we'd entertain it, because to us,
Yeah.
we're an American company. Those reserves are being kept in the United States. There's plenty of multinationals. Freeport McMoran, for example, in gold. There's plenty of companies that are worldwide gold miners. And as long as gold is still being stored here in the United States, I think that's a win for the home team, and mining is no different.
Yeah, yeah. It's just because some of the miners have partnered with sovereigns and other countries. Is that relationship something that you'd consider?
We would explore strategic relationships around the world as long as it's net benefit to the United States and or
Yeah.
shareholders.
I'm curious, are you mining at home?
Those days are long gone. For me, I think the best way for me to accumulate Bitcoin these days is via my W-2, more so than the machines in my basement. There was a time where that was very much on the table. The industry has reached a point where unless I have a wind farm or a nuclear generator, it's probably best for me to just focus on the industrial scale. But philosophically, I think running your own node is important. I think network decentralization is great. And I really respect the hobbyist miners for doing it at any cost and keeping the grid diversified. But those energy bills will rack up, so you need to be very careful with that.
I only laugh because it's kind of fun to play around with things like a
It is.
bidag.
It is a bit, yeah. Again, I think you need to meet folks where they're at, and so whether it's these Bitcoin mining space heaters that I've seen around, or BitX, where you might win a block every once in a while, you never know. These are small gestures, but they have a big impact at scale, and at least
Yeah.
showing the culture of Bitcoin is alive and well, and is really focused on sovereignty and decentralization.
My favorite story was with respect to the BitX was I was with Scott, who is the creator of BitX, and we were on an African safari with Gridless, which is doing incredible work in Africa in terms of um, powering communities that never had power. Right? That's kind of their business model. And but at breakfast, right after the safari, we went up to this really top hill, and they pulled out a Starlink. They connected it to the diesel truck that we had, Land Rover, and we connected a BitX to it. And it was just so amazing to, launch it and be mining. Like, you can mine anywhere
You
these
can, you
days.
can, you can. Well, thank you for doing your part to decentralize the grid. I mean, this has been a concern. Obviously, is hash pools or dominance, but what you're describing to me is the ethos of Bitcoin, which is decentralization. And so, if ever a pool or if ever an operator grows too large, the very culture of Bitcoin is going to be about finding ways to distribute that load or find ways to compete to keep sort of digital asset suitably decentralized. And you were doing your part to make that happen.
We are with the zebras in the
Whatever it
distance.
takes.
Awesome. Where can people find you?
Yeah, so I'm on Twitter, and folks are, or I should say X. So please, my DMs are open. I'm reading them, and if folks want to chat, they're happy to reach out to me on Twitter. I think we actually met on Twitter, so
We do.
it works. Email also is fine. You can find it online. But yeah, happy to talk with folks as they have ideas about ways that American Bitcoin can really define what it takes to be a category leader in our sector.
Awesome. Thank you.
Thank you very much.
Thank you for listening to this episode of Magsplaining. Make sure you subscribe to the show so you don't miss any new episodes. And if you turn on the notifications or if you leave a positive review, it can really help my show reach new listeners. This show is for entertainment and educational purposes only. Nothing should constitute as official investment advice, and you should always DYOR. Do your own research. Catch you next time.